Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Palantir Technologies PLTR stock and why I think analysts are secretly bullish and buying up this stock and company. We will also go over their latest news updates, the PLTR stock price targets, and why Q1 results of 2022 could actually be underwhelming for Palantir Technologies and why investors should brace for that. Remember to go and smash the like button right now for more videos like this one, comment your thoughts down below about Palantir Technologies, subscribe if you are new, and without further ado, let's jump right into today's stories. So Palantir Technologies, ticker symbol PLTR, currently trades for around $10.90 right now, with the low end price target among analysts being $9 per share, and ideally we would want to get our average price for Palantir Technologies under $9. However, the current 12-month price prediction on the low end for the PLTR stock is $9, while the average Palantir price target among analysts for the next 12 months is actually $15, which is above the stock's current price, while the most bullish price prediction and the positive price targets for the PLTR stock go all the way up to $20 to $25, and if we incorporate Morningstar's fair value price, that still sits at $31 per share. So clearly analysts are all over the place when trying to detect and value the PLTR stock price. So this is a very controversial stock among many analysts, and I'm going to go into detail about why I think analysts are actually buying up the company, and I'll tell you why. So the author of the Seeking Alpha article actually lays out around 22 articles, most of which we have talked about on this channel from my perspective, are actually extremely bullish. So out of 22 articles that were written since February 14th, around 20 of these actually said to buy the PLTR stock, with 6 of these saying that Palantir is actually a strong buying opportunity, and 2 of these articles say to hold the company, at least from the financial reporter's perspective. However, none of these articles said to either sell Palantir Technologies or that Palantir Technologies was not going to outperform the overall market. So without a single sell recommendation out of 22 articles since last year, that actually speaks volumes about what financial reporters really think about this particular company. So I'm going to argue that Palantir stock is a very good buying opportunity, especially if you plan to hold Palantir stock from now until 2025 or later. We can see that Palantir is rapidly expanding and improving, and we see this by mainly their financial metrics. Just if we compare the years of 2020 to 2021, we can see great improvements in their overall revenues as well as free cash flows. However, despite this improvement, other financial reporters and analysts are very bearish and negative about Palantir Technologies, specifically regarding their stock-based compensation, also known as SBC. However, what I want to highlight is that this is no longer a good argument against Palantir Technologies, and I think analysts could actually be using this information to purposefully lower the stock price of Palantir Technologies so they can buy it for a cheaper price. For instance, if we look at the following graph, which shows Palantir stock-based compensation as compared to their overall revenues, we can see that their stock-based compensation has dropped from around 293% of their revenues down to only 39% of their revenues over the last 6 quarters. So we can see on this chart that gradually Palantir stock-based compensation has made up less and less of their overall revenues, which is fantastic news, and that we see an overall very negative trend for their stock-based compensation, and eventually this will completely deteriorate, which could push Palantir more toward profitability, which we will talk about later in this video. So it's fantastic news to see that the stock-based compensation that Palantir is utilizing right now is dropping, and this is a huge expense that is preventing Palantir Technologies from becoming profitable. So if you are a long-term holder of Palantir Technologies and want to hold it past 2025, this is fantastic news, and analysts and other financial reporters should no longer use this argument against Palantir Technologies. Another argument that bearish investors should not use against Palantir Technologies is that they always said that Palantir is too reliant on their government revenue and government contracts. Well, thanks to their fantastic increase and revenue generation coming from their commercial segment, Palantir is no longer solely reliant on government contracting, and eventually I believe that their commercial revenues will eclipse and pass the amount of revenues that they're making from their government clients. More good news is that management has actually consistently predicted that the revenue of Palantir Technologies is going to grow by at least 30% from now until 2025, and this has clearly been seen by their overall CAGR for their revenues. For instance, they have scaled their revenues by around 47% in 2020, and they scaled their revenues again by another 30% 36% in 2021, both of these metrics coming in above what management actually predicted, which is great news for investors. So as Palantir Technologies' revenues climb, and even as their stock price lowers, it just makes Palantir a better deal. Imagine this. In 2025, Palantir is projected to be trading at around 5 times revenues, which is absolutely fantastic. This would be an amazing value play of sorts, especially for a growth company such as Palantir Technologies. So who wouldn't want to buy a fantastic growth company that's involved in artificial intelligence for only 5 times revenues? That is almost unheard of for a growth stock in this particular segment. So buying now and holding the PLTR stock until 2025 seems like a fantastic long-term idea. However, you need to take into consideration the type of investor you are, because if you're not willing to hold through market volatility, then this probably isn't the stock for you. Also, you don't want to over-allocate yourself too much to a single company. Again, I never allocate more than 5% of my portfolio to a single stock, and that's how I weigh risk to reward. Also, I want to point out that because the PLTR stock price has fallen down recently by a large margin, they're actually trading for around or basically where they started at. And this means that we've actually experienced a year of growth for Palantir's revenues and cash flows and other financial metrics, yet we can buy the company at the same price that it DPO'd at, which just makes this even more of a fantastic deal. The PLTR stock price is not falling because Palantir fundamentally is not a good company, it's falling due to many macroeconomic factors. The main reason why the PLTR stock is falling is that analysts continuously bring up the two arguments regarding their stock-based compensation and how they think Palantir is reliant on their government contracts and caused the PLTR stock price to absolutely plummet until macroeconomic factors ended up taking over, and right now the entire stock market is pulling back, which is to me a fantastic buying opportunity to get not only value stocks, but growth stocks at a substantial discount. But what's the proof that analysts are actually secretly bullish on Palantir Technologies? Well, here's a few. Although analysts are coming out with lower price targets and reasons why they don't expect the PLTR stock to do very well, there's actually a chart here that I have on screen that shows out of 28 analysts' ratings from February 9th of 2021 to April 25th of 2021, where the PLTR stock price closed to around $38, analysts were actually extremely bullish on this company, with around 26 financial reporters and analysts alike saying that the PLTR stock is a good buying opportunity, even though the stock price was above $30 per share. We had very minimal analysts saying that the company was a hold and to sell, or that the stock was going to underperform the market. So if analysts really liked the PLTR stock at around $38, why are they now more bearish on the company when it's trading at a more reasonable $11 per share? Well, the only answer to this is that they have changed their overall price targets on the PLTR stock as the price started to decrease to see how low they could actually push this stock so they can get a fantastic deal before then changing their price targets, causing the stock to appreciate later on. And we actually saw this from a recent analyst that I reported on in yesterday's video, who actually increased his PLTR stock price target, and I think many analysts will eventually follow suit. And with that being said, that means Palantir Technologies is a strong buying opportunity for long-term investors, especially if you're waiting to hold out until past 2025. Even Forbes believes that Palantir's PLTR stock is currently oversold right now, which means it's trading at a fantastic discount of only around $11 per share. Right now, it means that the PLTR stock price is trading at around 11 times their consensus 2022 revenues, which is fantastic for an overall growth stock. However, like I've said before, ideally we would want it to trade below 10 times their projected revenues. Now, what is very bullish and positive news is that Palantir is actually a better value play compared to many of their peers in their particular software sector. So compared to other software companies, Palantir does have a better risk to reward ratio on top of trading at a much cheaper valuation. I think it adds to the bullish argument that Palantir has overall fantastic growth and that their future projections for growth remain very solid. More catalysts that could come up for Palantir Technologies is actually going to be the ongoing war between Russia and Ukraine, which could drive demand for Palantir's government contractors, specifically for other military customers, to have very secure data platforms so Palantir can interpret and help them make decisions in times of war. We can also see that their commercial segment can also increase in revenues because their artificial intelligence is just getting better and better, and that is the thing that actually makes other companies more effective and efficient by either cutting costs and lowering expenses or having ways to generate even more revenues depending on what the analytics say about that particular company. Now, I do want to talk about how Q1 of 2022 can actually give Palantir a bad taste in many investors' mouths. And the reason for this is that Q1 of 2022, Palantir Technologies will have a couple unexpected expenses, as well as not as impressive revenue growth that they experienced in Q4 of 2021. Now, although the revenue increase will be around 30%, it is going to be less than what they had previously, and that could be very bearish for overall investors. So don't let Q1 of 2022 scare you. If anything, use this as a good buying opportunity while practicing good risk management to hold out into the long term. And the best part is that if you do hold out to the long term, Palantir Technologies is anticipated to become a profitable company between 2024 and 2026, mainly due to their stock-based compensation declining as time goes on, and that's going to make them positive on a GAAP basis because technically they are already profitable on a non-GAAP basis. So as the company continues to scale up their revenues and they continue to drop off on their stock-based compensation programs, this is going to benefit Palantir Technologies exceptionally, on top of fantastic free cash flow generation, solid fundamentals, and an overall fantastic addressable market. And that's why Forbes actually says that they estimate that Palantir's valuation should be trading at around $21 per share right now, which is a very bullish price target, and this gives investors over 90% upside from the stock's current price. So this is very bullish news and positive news for Palantir Technologies, but remember to always do your own research, practice good risk management, and don't over-allocate yourself to a single stock, because then you take on unnecessary risk of potential losses, especially in this current market environment. So remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below, and I will see you in the next YT video.